Welcome back, guys. Good morning. It's 12 o'clock, 12:07 Nigerian local time. So, how you are doing? I hope it was a wonderful day, and I hope you are preparing yourself ahead of this month. Today, marking the end of January 2024. Gee, marking the end of January 2024. Have a lot to say about what we should expect next month and what to look out for going in next month. Although um, the market is predictable, you can see that every day we call out what is going to happen, and every specific day it keeps on happening, the way we project it. The way we project it, if not the same, but most likely everything will always work in hand together. Well, it's no longer I don't have to any I'm no longer entitled to prove this to you. You yourself can see the proof. Now, what me personally I'm working towards is being able to have a perfect entry, because I don't know, but no, although I do make money with my buyers, but I'm always feeling like I didn't enter perfectly. But well, whenever I enter, I try to manage myself and come out either in profit or in break even or in loss, which is the only thing that can happen. It's either you make money, you lose money, or you did not take money out of the market. That is it. So there are so many things I would like to talk about. Maybe I'll go deep in next week. So let's just dive in with what we have today. Then what you are looking at currently, which is the daily contract for Euro US dollar, and I have this statement here. The Euro US dollar daily contract for Wednesday 31st of January 2024 did deliver nicely as called out yesterday. But yes, we delivered the way we call it out yesterday. But we did take out the 4-hour buy side liquidity, and market reversed impulsively, indicating it was a sweep of liquidity to engineer sell side delivery. Meaning that yes, we it deliver how we call out yesterday. We said we're going to come and take out this Friday high. If you go back to my yesterday video, you're going to see me call this. We're going to come for this high. Did we come for that high? Yes, we swept it. Now, if at all it is going to be somewhat little bullish, we're not supposed to see a downward reversal like this, impulsive. Now, because of how we deliver, it just indicate that that particular thing that just occur is a sweep of liquidity to engineer. We sweep buy side liquidity to engineer sell side delivery, meaning that whenever price is going down, there's always this short time liquidity sweep to engineer. Like when price were here, we sweep this high in order to deliver this sell side. That is, the market maker, they price it higher. If they have intention of selling, they price it higher to sell short. I don't know if you understand what I'm saying. And if they want to be a buyer, they price it lower to buy long. And then that's to tell you that all these lower prices we are seeing is actually taking us somewhere where they are actually interested in buying later. But now for them to be a buyer, it's either we take out this particular low, which is our next target right now, and this relative equal lows that is here, this relative equal lows, then they can engineer the liquidity to price the market higher. But we're not interested in that right now. Let's look at our current scenario. So I am very pleased to see euro price back impulsively into the weekly drawn liquidity, and also closing the monthly so bearish, meaning that the way we close this month indicate how bearish it is going to be for euro going in next month. Because If we close so bearish like this, almost close to the month, the close of the month, it indicates a whole lot. And I don't know, that's one of the things you will get to learn as time goes on. Now, casting forward, we can now be of full confidence that euro is going outside the weekly internal range liquidity, which is this weekly internal range liquidity, sell side liquidity below the below, which is this sell side liquidity below, plus the new month will deliver price outside the monthly range. Now, going in February, we expect that the February will take us out of this particular range, which is take us below this range. That is what I just added there. Then our draw on liquidity now remain the Wednesday 13 December, which is this candle low, and plus this candle low, then plus this candle low. That is our next draw on liquidity. We're going to be working with how the market is engineering liquidity and how it is delivering us lower. If it's going to be impulsive, then, and again, if this all this price lower is a sweep of liquidity to price higher, we're going to see how we close. Like, if when we get here, how did we close below it? Did we close strongly or partially, or just like what happened today? All those kind of things says a whole lot in the market. Let's go to the XY. So this is the XY daily contract for 31st January 2024. Now, what you can see is that this is almost an indecisive candle. Like I said yesterday, if Tuesday did not give us the biggest range on the week, then we are going to have it on Wednesday. And we see it happen here today. So going forward, we can call this out, this consequent encroachment, which is the difference between this, the midpoint between this opening and the low of the of today. The midpoint, which is the consequent encroachment, we can expect market to close. It should not, like going in tomorrow, should not goes below this consequent encroachment. And we have this buy side to target, and after this buy side, we have this buy side. So that is it for the dollar index. Then next, let's go to the 4 hourly contract on euro. So this is the 4 hourly contract on euro. Now the euro US dollar 4 hourly contract shows nicely how euro delivered in today's trading range. Now on the 4 hourly, we can see that euro did sweep a short time swing low and price higher to sweep the Friday 4 hourly swing high before pricing lower. What I mean is that we have this 4 hourly swing low. You can when we go to the hourly contract, I'm going to explain something for you. So we sweep this low during the London session. What happened? We come here to sweep this high. That low deliver us here. That is, they price it lower to buy it higher, and they buy it higher to sell it short. So just, you can see how why when they say this market is driven by liquidity. Now, when you know your liquidity, how liquidity is delivered, then you can now think of utilizing your PDRs, which is order block and all that. Now, somebody will not tell me because there is this order block here, that is why markets go lower. No, because we have sweep liquidity. If at all there is no liquidity here and this is where the liquidity is, they will still drive us to sweep this liquidity so that they will use that to engineer sell side delivery. And that is it. Casting forward, we can use the 4 hourly inversion fair value gap to support the bearish buyers as we currently trading currently interested in sell side delivery, meaning that this particular blue line, we can use it to support our bearish buyers going in tomorrow or next, since we're already expecting sell side delivery. But with the look of things, we don't know if we're going to get here. So whatever the market gives us on the lower time frame or during the session that we trade in, we're going to utilize it. Don't don't force your will on price. Let market let the price show you what it's willing to do, then you work with it. Okay, please don't risk much. You know the rate of dollar right now, so you no cry. So this is the hourly contract, 4 hourly contract, sorry, for DXY, and we can see that, you know, we deliver this high price and fall short of it, and we come back into the range, and we close here. So this is the daily consequent encroachment of the week, the daily candle week that we talk about. So we going to expect the market to respect this area and should not price it lower if we are going to deliver higher price. And what do I need to add? Well, there are so many things here that we needed to talk about. You can see how this particular 4 hourly has been respecting price. Now, it is not price is not actually going back because there is this fair value gap here. It is going back because it has already engineered the liquidity. Then it is now using this PDRA to support its movement. That is what I was trying to explain. We are not going up because there is 4 hour inversion or 4 hour fair value gap, or because there is a fair value gap. We did go up because it has already engineered the liquidity and is now willing to deliver. If this liquidity, if they are interested in this low, there is no way we won't come here, right? So have this at the back of your mind. That is why when you are dealing with price, you need to spot where the liquidity is. So you now use the PD array that respects that liquidity. Because there is a fair value gap here, why not it respect that fair value gap? No, because the liquidity it is interested in is already below the fair value gap. So we're going to use what? The fair value gap that is below that liquidity. Well, this is an algorithm concept, and it's really, no, don't lie to yourself. It's not easy to learn this. Although no matter how, like, no matter, because I'm calling it out like this doesn't mean I am perfect or I know how to trade very well or I am or extremely profitable. If I'm so extremely profitable, you should see me riding on my cars or something like that. But yeah, you don't. Well, that is, everybody knows what is after, and you know, just make sure you learn the proper skill, learn the skill properly. When you learn the skill properly, and that is the deal breaker. Every other thing comes in after you've already acquired the skill. So let's go to the hourly contract on euro dollar. So this is the euro dollar hourly contract, and as we can see, we have this low here, and we already trading, we have this inversion fair value gap here, which we are looking at for. Then you can also see how we deliver. We created this low, created this high, we swept this low. Now look, there is a fair value gap here. Why not market stay above this fair value gap? No, we wick below it because it is interested in this liquidity here before pricing higher. There is an order block here. Why not did the market respect this order block and price here? No, we are interested in this sell side liquidity. Is this not an order block? Why not respect this? No, we are interested in this liquidity. So when the market is interested in liquidity, it does not respect any PDRA. But after it has taken the liquidity, try and spot a PDRA, a fair value gap or inversion fair value gap. Definitely it is going to work for you. So I have the statement here that Euro US dollar hourly contract shows perfectly the intraday price delivery for today market trading range. Now on the hourly, we can see that the euro price deliver liquidity efficient, which is what I just explained. We take every short term lows and high in today price delivery, which is what I just explained. Now the daily profile is an obvious 10 o'clock AM New York local time as the high of the day. That means the high of the day is this candle, this particular bearish candle or down close candle that sweep the Friday high buy side liquidity. before delivering lower prices. Now the low of the day is formed at 3 o'clock PM New York local time that swept Monday low sell side liquidity before pricing back into the what? Into the trading range. Casting forward, we have a 1 hour fair inversion fair value gap that I am looking out to support the bearish move and act as a resistance on price if we eventually trade to that area or to that point of interest. Meaning that since I'm seeing that the market is no longer interested in this liquidity, it has already taken this liquidity and giving us lower prices. So I can now use any PDRA that in support of the lower price move. We have this, which is inversion fair value gap. Then I'm looking out if the market is willing to come here, then we can get here before. If we get here, then we should respect this area and go lower. That is it. And let's go to the dollar index. So this is the dollar index daily hourly contract, and it's almost the same. We have the daily consequent encroachment, which is this black line, and inside a fair value gap. So if we did deliver open and deliver lower into this area, then if price did give us allowance to reach out to this point, then we can use that as our point of interest to be a buyer. But going in tomorrow, we expecting the market to engineer short time liquidity, meaning it should create a high and a low before. There will definitely be a low created before London session, so that low will be swept to engineer buy side for the dollar index, meaning that we can have something like this tomorrow. I don't know if we create short time high, short time low. Then during the London session, we now swept it to go higher, meaning that we create a short time high, short time low, in low before um the London session, so that we can now sweep this low. So there are people that are trading on all this fluctuation. So when we sweep this low, when market sweep this low, not to it, when the market sweep this low and price into this fair value gap before going higher, this is how you make use of your tools or your PDRA. All right, you make use of your PDRA when you see that market has already engineered liquidity and its willingness now is focused on on a certain direction. Then you now utilize your liquidity or your PDRA. That is it for this. And well, we've seen what we are expecting, and looking at this whole price, imagine this month was so choppy. Look at, we go higher, come lower, go higher, sweep liquidity, come inside, create another engineer. When we created this high and created this low, we start to the engineer liquidity. The market start engineering liquidity, and now we taking those liquidity, swept this one we swept it today. You look at, there is a liquidity here, we swept it. You just keep seeing random liquidity being swept. We swept this here, which deliver all this to sweep this. Now we are going back for this. You see, we've been on a range. So that is why I'm saying that going in next month, I'm expecting to see next month take us outside of this range, or else we're still on monthly range and weekly range. Then we are trading daily fluctuation in price. That's why you shouldn't bet so much on these moves on this market. I don't know how long it's going to take Euro to leave this range, but because I'm getting bored with Euro, sincerely, because it's not really giving us that kind of good vibes. If you are not strong enough, it's not for the weak right now. If you are not strong enough, you can't survive in this market. Right? You can't survive in this market. Well, that is it for today. Tomorrow on Saturday, I'm going to give you guys the monthly overview I already take the picture of it. I'm going to give us the monthly overview and talks about it. So thank you for watching. If you find this helpful, please do like this video and subscribe to the YouTube channel. God bless and have a